Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, I've been hanging on to this position, man. It was really hard last night because it came all the way back, but we are now back to plus 50 here on the trade. So super happy about that. But we got like some big news that could like make or break this. Initial jobless claims estimate 200K. We also get like some Canadian numbers and stuff like that. Okay. Fed's Bullard speaking at 8 o'clock. To the charts. So you can see here, we had this spike up here, man. Pretty crazy. It came all the way back on like low. Well, I mean, it was volume. There was volume, but then I know this was like, I was like, what the hell is going on? I don't know what caused that flow, but it looks like in the end it didn't matter. So S&P 500 kind of struggling still. And I'm concerned for the stock market here, to be honest with you. You know, hopefully it doesn't go that way, but I am betting otherwise. So let's hope I'm wrong. Oil still holding up in this range. I thought it would come back a fair bit more than it did, so not necessarily good. Gold and silver pulling back a little bit from their recent gains, and copper kind of gaining a footing a little bit after that pretty disastrous what was that, Monday, Tuesday? Anyways, then we got the dollar. The dollar is like the big question mark. If we go into this, like, what does the dollar do? Does the dollar become a safe haven, or does the dollar become like, oh no, like this is too easy, the money is too easy, and the ECB is not reducing rates, so we want the euro, not the dollar? You know, I don't know. It's a big question mark in my mind, but that's where we're at. Oh wait, Bitcoin. Yeah, Bitcoin hasn't done anything interesting today. I mean, it kind of came back yesterday, right? But it's still just chopping around in this range that they've got, right? Man, when you look at the chart here, you come over here, you look at the chart, the S&P 500, you know, that the little downtrend that's starting doesn't look good, but we're still above 4,100, so it can't be too bad. What are your thoughts on the job numbers for Friday? Well, so let me just come in here. Friday is going to be a weird day. I'll tell you that. Okay. Like the markets all close early for Easter and all that sort of stuff. I've seen it before. I don't remember a whole lot. I don't think a whole lot happened. It was not like a significant non-farms payroll. This one could be significant. So I don't know what's going to happen, but it could be really weird. Right. The employment change, the forecast is 236 versus 311. Okay, so that is a really big drop, right? They are forecasting a pretty big drop. Granted, that would be pretty much in line with what the estimates for the past few months have been anyways, and we keep outperforming that, right? So if we came in tomorrow and we underperformed the estimates, I think the market could act pretty adversely to that. I think the market could react very, very adversely to a less than expected number. Another thing I want to note is that we got like the change in the employment rate last time, right? We got 3.6 when we were expected to be like what, 3.2 or something like that, 3.4. I think that probably moves up a little bit. So, usually we get more information in the evening about what kind of Wall Street is expecting and what the numbers are and stuff. So I have a lot more to say tomorrow morning before the news hits. But yeah. Anyways, so I don't have my news squawk on. Got 30 seconds here for the initial jobless claims, 200K. We'll see. I don't know if this one's gonna be too big, but I don't know. It could come in at like 150 and everybody be like, "Oh no," or it could come in at like 220. Actually, I think 220 is pretty realistic. 220 would probably cause a little pop. Here we go. Whoa. Okay, so it was 220. 228. 228. So yeah, we got a little pop, but it was very, very brief. Very, very brief. The micros did not move very much compared to how much the treasury over here moved. And look, the low liquidity is causing it to push the bottom of that range. Okay, now the Canadian employment change, they were expecting 7.5 and they got 34.7? What? Okay, I don't follow the Canadian numbers very often, but that sounds a little bonkers. Hold on. Should I be concerned about that? I don't know if it's a huge deal. Nah, it's not a huge deal. The Canadian numbers vary quite wildly. Well, I really hate it's like it pops in your direction and then it starts going they use it as an opportunity to take it the other way. But for us in the United States, unemployment claims slightly higher than expected. This is all pointing for a jobs number on Friday that's probably not going to be good. Now, they're already predicting that it's not going to be good. Okay, but given how bad the data has been, I mean, I'd say it's pretty likely that the market is going to be, that is going to be worse than the consensus estimate still, but I guess we'll see what happens. So now that that's out of the way, I don't really have a whole lot for the rest of the day. So I think that I end up sitting here and sweating this out. When we got that initial move up, I was like, oh yeah, maybe I can relax today now. But then it came back. Why? How much did that come back? Jeez, 3 basis points? Come on. Come on. Somebody is selling it though. Like, look at that. Well, I mean, it's 5,000 contracts, but this is why I don't swing trade. Yeah. Don't remind me. I last night I was really like I said No, it's okay. We can just stick to the plan. But I was quite perplexed as to why it was coming back so easily, you know? Like really, it was like yesterday. It was like a 5 basis point pullback for no real reason, you know? Profit taking, who knows? Okay, so the S&P 500 is not looking so hot. So the thing that I'm still wondering here is the Canadian numbers that we got. Does that really matter? Well, the unemployment rate went down to 5% from 5.1, so that kind of gives you an idea of how big of a difference it was. I don't think that should be a huge deal. It certainly shouldn't be bigger than what this unemployment claims tells us about what we might get tomorrow. But the market did come back a pretty good clip. Small businesses file for bankruptcy at record pace, surpassing COVID crash? No, really? Meta orders, yes. I mean, if you are a big guy and you have a massive position on, how are you going to get out of it, right? Now, you may execute at an exit position meta order a little bit differently. You might, for instance, spread it out further to try and reduce its impact on the market, for instance. Let's see here. What else on Zero Hedge? Goldman warns of a shocking surge in tomorrow's initial jobless claims. Oh, okay. Well, what did they say it was going to be? According to Jan Hadzius, who has been turning more skeptical on the Biden jobs data, the same distortions to the seasonal factors which we blasted 2 months ago are currently depressing seasonally adjusted initial claims by 40 to 50K and have masked a roughly 45K rise in the official series since the start of the year. This trend, Goldman adds, is corroborated by the recent increase in our time measure of layoffs from Warren Nordis's, and with virtually every bank now lashing out at what is a labor department that is losing credibility, even with Wall Street's bullish cheerleaders. Yeah, Hadzius says that tomorrow's annual update to the jobless claims seasonal factors is the first opportunity for the statistical agency to correct these problems, which were introduced in last year's update. What happens then? Well, if the BLS fixes the problem, Goldman suspects that initial claims could jump to over 240K in tomorrow's print versus the 200 consensus, and we got 228. So they weren't wrong, but it was not nearly to the degree at which they were thinking. So that could also be factoring into what we're seeing this morning. There is definitely some volume trading here. I am going to, with my big one over here, I'm gonna take an add to the swing. Okay, small businesses across the United States are experiencing a surge in bankruptcies, surpassing levels not seen since 2020, according to a UBS note reviewed by the Epoch Times. Yeah, well, if the Epoch Times is reporting it, that instantly makes me less interested. Yeah, the claims number is out. It was 228 versus a consensus estimate of 200. So not as bad as Goldman's estimate, but bad. And we did get a pop. They did go the direction you would expect on the initial news, but then they flipped it pretty hard. So what's causing this flow against us? Well, it could be profit taking, and like the number was not 240, that sort of a thing. It could be that they did not like the Canadian numbers and think that the Canadian numbers suggest that inflation is still a large concern. I have to say, the amount of volume that it has traded in this area since that number is a little startling. We are now almost so we were at 299. Oh no, wait, wrong. That's the spread. Wrong thing. We were at 194 and now we're at 176. Yeah, I had to refresh. Yeah, I getcha. Wasn't pulling up in Forex Factory for you. Oh, you know what? While I'm thinking about it, this would be a great time to tell my phone to update. Because freaking Samsung is always like, yep, we're going to just arbitrarily decide that you must update your phone today. And then it restarts it at the worst time, so. There we go. Schedule it? Can you do that? I don't know. It's doing it. It's restarting. Okay, well, the equity indexes seem to be moderating. They are chopping around quite a bit though since the news. Lots of tails there on those candles, right? Lots of wicks on those candles, whatever you want to call it. Yeah, mine never gives me an option to schedule it. It will say, do you want to do that now? And then you're like, nah, I'll do it later. And then it lets you put it off for so long before it's like, nope, we're doing it now. We're doing it now. I never knew we could set a what do you mean by that? Yeah, I always pick later. But the thing that makes me mad about it is that it will force it. If you put it off long enough, it will force the update. By the way, something else I've been seeing in the treasuries since we left yesterday, and I'm seeing here again today after this news, is there appears to be a pretty aggressive flattening coming into the market for some reason. I don't understand this. Why that would be, but there seems to be a pretty consistent flow of flattening over the past day or so. Like initially when we were like, yeah, it's a steepener and it's, pretty clear and all of that, it was like ever after that it's been flattening, just to prove me wrong. Well, not to prove me wrong. I didn't say that it was going to continue to steepen, but just to make me look silly for pointing it out, right? No, we're talking about your phone updates. And then the thing is it does this thing where it's like when you update, it has to like update all of the applications and do it. Like it takes a long time to do it. And like if it decides to do it like in the middle of the night, for instance, you might not get your alarm go off, for instance. Well, another thing I would add is that it sure seems like the treasuries are having some problems holding these prices that we've moved higher. So maybe the market is saying even though things look bad that they can't go down too fast or something. Like they can't reduce rates that quickly. So we should consider that. Because there may be a mean reversion flow coming into the treasuries on the premise of saying, well, that's as far as rates can actually go. That maybe rates are already pretty accurately predicting the coming recession and whatnot. Maybe in order for this to really move for us, in order for the treasuries to move up for us, maybe we need like another leg of this banking crisis sort of thing. Mohammed A. El Arian, Axios on the U.S. flow of funds to money market funds. This has market implications favoring high-quality bonds, particularly U.S. Treasuries and economic ones, making bank credit less available for some. By the numbers, more than $300 billion has poured into money market funds over the last 3 weeks, driving the total assets invested to over $5 trillion. The shock of last month's banking panic started pushing cash to money markets for safety. Also, newly attentive depositors are likely to have noticed that average money market yields trounced those offered by bank savings accounts, 4.5% versus 0.4% from a. So really, the bank savings accounts are still only giving you 0.4%. As a result, cash is likely to continue moving that way for a while, according to analysts, even if the surge driven by recent bank worries start to decelerate. Okay, that is useful information, actually. So that's saying that treasuries could remain elevated for a while, even if nothing awful happens, right? Don't know how big of an impact that actually would be. Okay, Steve. Well, let's read the thing he's commenting on first. Squawk Box. Investors are bracing for tomorrow's jobs report, which will give a fresh read on whether the Fed's inflation-taming measures are gaining traction. Steve Leisman, this report on the possibility that the jobs number could be below consensus has an important caveat at the end. The consensus has underestimated job growth for 11 straight months and has been light by an average of 101K. So the under has been a terrible bet. It has been. And the issue that I have is that the number is likely to be under consensus, but the consensus is already lower, right? So yeah, this looks pretty depressed here, man. I mean, the selling has backed off, but why sell 20K there? That might be enough of a flow for me to say, okay, let's just take what we got. How likely are we to see a flow here this morning that pushes it all the way back up? I don't think that the Canadian numbers are really very useful for predicting what the US number is going to be. Cat Turd, I think it's hilarious that Chicago elected a communist mayor to the left of Lori Lightfoot, and they absolutely deserve all the hell they're going to get for the next 4 years. Jeez. Is Chicago really going to go that badly? Could be. I'm certainly sitting here going, well, maybe I would move to Chicago for the right trading firm, but now I'm not so sure. This is the third leg, so probably in other words, countries are selling U.S. bonds they had been holding. I don't know. But look, somebody's doing something big, right? Like there is a very clear meta order sell, and it's big. It's over 20,000 now, probably 30,000 contracts almost. 20. Let's say 25,000 contracts. Now, granted, they went much lower yesterday on much less volume, so. The book doesn't seem to be giving us any hints other than that there's plenty of liquidity below us. Let's see, they seem to have created a floor for a little bit, and now they're like trudging further. I don't know, that this part right here might be kind of the tail. So again, sometimes you'll get like a liquidity hole, and then they'll drive it even more, and that's like the last little bit of it. We are seeing the dollar move up here, aren't we? The reason the dollar went up because of less inflation, because of the lower ISM. That's the only thing I can think of. I have a hard time explaining what the dollar is doing these days. So one of the big flows that I would consider in the dollar is that if the ECB and other central banks continue to be hawkish and the Federal Reserve has to get dovish, that really hurts your currency, right? So in that situation, I would expect the dollar to decline. But what we're seeing right now is the dollar is moving up. Okay, see it reverting back to 19.5 really quickly. So that I think is an indication that it was a tail. But yes, I think you also might be right. What we have seen with the dollar over the last year was that as the Federal Reserve got more hawkish, the dollar got stronger, not weaker, because everybody was betting on a weak dollar, right? And then like the bad scenario that people were predicting turned out, and the dollar did the opposite of what they thought it was going to do, right? That was pretty funny for me last year. The dollar moving higher and the treasuries moving lower, I think does suggest inflation concerns. So does the Canadian jobs 35K, like this is the thing, is that the market rarely pays attention to Canadian jobs numbers. Like, I'm usually not even aware that the Canadian jobs numbers are coming out, right? And here this time, not only were they like slated up and everything, but it seems to me like the market is reacting to Canadian numbers. I mean, the market sometimes reacts to Canadian things, but this is the first time I can think of where I felt like the market was having a strong reaction to Canadian employment numbers in particular. Yep, to 1,500. Yeah, although I am giving up some of it here on this. So my other contract was way early, right? My other contract was way early. Wait, where is it? Orders. It was 19.5. Oh, okay. That wasn't too bad. It wasn't too bad. This one up here in the 10-year is a sim trade. This one in my micro is my real trade, but this one is still the let's practice Seth's long short treasury fund. So I don't know. Sometimes I feel like I'm taking a much larger bet in Seth's long short treasury fund, a larger bet than maybe I should be on this one. OPK, what is? Can you put your on screen? I mean, I can show it to you. I really don't feel like I have room for a how do I say, like to put this up there all the time, right? I don't really feel like I have room to always have this up. But not only that, but I don't want you to watch because you're trying to follow me. That's maybe not what you meant by like, I want to shadow your trades or whatever. Or I think what you're saying is I want to track your performance and see if you're actually any good or anything like that, right? And what I'm saying is I don't want you to come in here and be a loyal viewer because you think that I am a successful trader or that I've had success in the past, right? I want you to come in here and be a loyal viewer every day because we provide correct and accurate information about the behavior of markets and current market happenings, right? This is the thing that, yeah, I can't, well, I kind of make, it's a little intentional, poopy head. Like in all honesty, I've had a couple of experiences where I felt that maybe me taking the trades on the stream actually was impacting the market a little bit, and that was part of why I really shifted my mindset to I'm only going to take a trade in a situation where you'd have to be a complete idiot to try and trade against me, because I was like, there could be somebody trying to mess with me. And I know it seems really dumb, but it's just happened so many times. And what I know about the market says that it's realistic for that sort of thing to happen. So I just kind of started to play it safe. And part of that has been, I don't come in here and say, okay, I'm thinking about taking a trade. Here's the trade that I'm thinking about doing, and here's why. And I don't do all of that. Usually what I do is I get into the trade when nobody's paying attention. And then maybe 5 minutes afterwards, when everybody realizes that I actually took a position, I might explain what I was doing, right? So I'm sorry to be like that. But I really feel like that's the thing that's best for us. And again, I don't want the focus to be on Seth's trading per se. I want the focus to be on what can we prove about the market? What is accurate information? Let's analyze the possibilities and the scenarios with the macroeconomics, right? I think I've been stream safe before. I do. I don't know how big of an effect it was and everything, but yeah, I think that there was one or two situations in particular that I think I was getting stream sniped. Like, it wouldn't have required, you wouldn't have had to have been very big to have made it happen either, because I was being dumb and I was kind of taking like a YOLO trade in a really quiet market. where it makes it really easy for them to screw around with you, right? Okay, well, does look like the volume is kind of evened out. So back to the liquidity hole at 19.5. Do you think the market makers push? They do. Well, so I think push is the wrong word, right? The market maker can't really push. But what the market maker does is they kind of make it like quicksand. What they change the liquidity conditions to be like quicksand in a way that disadvantages the most amount of money that they can, right? So like if everybody's long, if they know that like all of the trend traders and the short-term traders are going long in a situation, the market maker isn't necessarily going to sell contracts against them. I mean, that would be pushing the market, right? Instead, what they do is they make their bid softer. Okay, you can see this very, very clearly in the micro yields, especially if you come over to these ones like the 5-year, for instance. Oh my gosh. Well, okay, the 5-year is probably a little bit too crazy, but like the 30-year. Okay, so there's very little liquidity out there in the 5-year, and you've got this really wide 10-tick spread between 3.548 and 3.558, right? Nobody's traded it. Okay, but if I were to clear, if I were to buy here and try and clear this bid, right? I highly doubt that the next bid, that the bid would move up to that price. Instead, they would keep the offer at that price, so that if I get nervous and want to exit that position, I have to give up the spread to them, right? And they'll do it every time. Like, you can do the experiment, right? Because there are situations all the time where you can come into these, like the 5-year or the 30-year, and you can be the only person that has actively traded it that day. And I guarantee you, as soon as you take the trade, it's like all of a sudden the market maker starts moving, holds the spread in a way that works against you. I don't know who would cause it to happen, but I think that part of what could happen in a situation like that is like somebody could come in and take a trade against you, and they might not be very big, but because of the type of market it is and everything, that creates enough other volume that it kind of moves against you. Is I think that that's the one time that I'm thinking about in particular that I think that happened. I can't even remember. To be honest, I can't even really remember. I just remember feeling like that one day and looking at the data and everything and like how much it would take to move the market and everything to say, well, you know what? It's not very smart to get in a position there. Right? Haven't seen a tick in the 5-year all week. I know. It's a little weird. I think sometimes I sit here and I'm like, well, if the spread wasn't so retarded in the 5-year, maybe more people would actually trade it. But like sometimes the spread comes in the 2-year and you still don't see a whole lot of volume. No, there's lots of reasons to trade the 2-year right now. Good morning again, Walter. Wait, didn't you already say hi this morning? Oh no, you're saying good morning to Jivanlal. Is that an Indian name? Yeah, okay, so Alligator has a story here from Forex Live. U.S. dollar bid returns as Treasury yields rebound. The U.S. weekly initial jobless claims number was softer, but there was plenty of chatter about technical factors driving it higher ahead of the report. That might have led to crowded positions against the dollar in the bonds. Though the release was soft, along with the negative revisions, the dollar has tracked higher since and yields have risen. These moves could also reflect flows. It's a long weekend and tomorrow's non-farm payrolls report will be released into a thin market. All kind of working against us here. Kind of surprised there's not a bunch of market makers all in the micros trying to debate activity with thick, heavy, healthy bugs. Yeah. Well, but you know what I think it is, Uzi, is I think that the trade doesn't make sense. The market maker trade in the micros doesn't make a whole lot of sense. So in order to really do this effectively, you would probably need a data feed to broker tech, right? And the bids and offers that you would be getting from broker tech as like your arbitrage to arbitrage against are not less than the spread that you have, are wider than the spread that you see. It's like usually a basis point, and then you still have to factor in things like the cost of carry and stuff like that, right? So I think that that's why it's like that. If the broker tech data was more available, or the broker tech books had a closer spread, then maybe it would make more sense and you would see a lot more of that. Because I've looked at it several times and I'm like, well, it looks like it's possible, but I would have to have some sort of real special deal getting like data for free from the CME for it to make sense. You get broker tech with TT? For how much? Do you have to pay for the data? What give me details. I talked to broker tech, or sorry, to TT the other day because we were talking about it. So I thought that they did have some solutions that were cheaper and more like retail focused, but no, they did not. They just have the two that you can find on their website, and they're both very expensive. It was like $200 and $500 a month. Well, boys. I don't know what's going on here, but this flow is just too much. So I gave up half of my profit. That really sucks, man. It really must be like, man. This is just a really crazy downtrend. Really strong volume downtrend for it to be all technical factors and everything. Definitely seems to be related to the dollar. Definitely seems to be related to the dollar. Like, it doesn't make any sense to me that after all of the other flow that we've had this week, And what appears to me to be a pretty fundamental shift in like the economic picture, and then the flow that ends up mattering or ends up being the biggest flow is just technicals. Crowded position against the dollar and in bonds. But I suppose if the dollar, I suppose that if there was a crowded short against the dollar, that it could be large, you know? Could be a large thing. You know, now that I'm out, they're going to do this thing like, just kidding, Seth. We were done and now we're going to go up to the highs. I can always get back in if I want, though. And to be honest with you, I think I should have gotten out of that a little bit earlier. In fact, I'm think that after it popped and then it didn't go further, I should have thought about taking it out, because the thing that's you know, I've been starting to think about is like, is this really actually that good of a tactical position though? Because the non-farms is going to be so illiquid, right? So yeah, you might have the right trade, but it makes it really risky because of that, right? That last this leg lower though, that was like another leg. That was for sure another leg. I don't want to sit in a position against that forever. I can do that on this sim account over here, but no reason for me to give up. $20 over here for no reason. I should have done that. So yesterday I kind of, you know, what I'm struggling with now in this kind of trying to do the swing, when I turned around and said, okay, let's try and do it live, right? Is that I'll see the opportunity to take the quick profit, and it's kind of like, well, you have to stay in something that you know is going to move back a little bit in order to stay in it for the longer trade, is what I'm saying. And why don't I just take the quick profit and then hope that it comes back and I get a better, you know, I get another position to take it for another leg. Well, if you do that, then you miss the leg and then you really feel dumb, right? So I don't know how to deal with that issue. And I'm not even sure if it's like a strategic issue or anything as much as it is like a mental issue, right? Because from a strategic sense, of course I'm small, so that part of it makes sense. But if I was like a big guy, like if this was Seth's long short equity fund, it wouldn't necessarily make sense to try and trade those little pullbacks, because it would just increase your transaction costs. Look at this, like the 15s, those are getting pretty wild here. Like the dollar is getting really wild here. In fact, this is enough now that I feel the need to come in here and look. I don't know. So from this perspective, 101.67 and the amount of movement that we've had in the dollar today doesn't look too far out of line with your regular volatility in the the currency markets. But it's affected the treasuries so strongly today. No, if anybody messages you unprompted, it's not me. I do not message people. It's extremely rare. It's extremely rare that I will message someone. Actually, let's see who it is. Yeah, it's probably this one right here. It's probably this one right here. Speculator Seth number 4856. Can you? Nope. You can message me though. You know what I think is so funny is that a lot of people don't message me or think that they have to add me as a friend because a lot of people on Discord have the thing set where you can't be messaged unless you're already friends, right? Which if you're getting spam and you're tired of it, that's what you do. Okay, is you set it so that you can only be messaged if you're friends. But I don't know. I got out at 9.2. It hasn't moved that far, even though the flow still looks pretty strong to the downside. Another thing we should note is that there was a lot of liquidity down here. So that's kind of wild. I wonder. The thing is, these guys that are anti-dollar, I'm calling them the dollar collapse cult. Okay, led by Peter Schiff. The dollar collapse cult has been really noisy the last month. I think that that's largely because there has been a couple of headlines that at least on the face appear to be supportive of their position, right? Because there's, you know, the Saudis, for instance, doing trade with China in yuan. Well, that was a headline that came out this week. It's something that we've known was in the pipeline for several months. And the Saudis have said several times that it's like, well, this is not like we're going to start transacting everything in yuan. It's just China is big enough that it makes sense for us to transact with them in their currency, right? So that is not evidence of the yuan becoming a reserve currency. That's just evidence of China being large enough that people need to use that currency to trade in from times, right? It would be a very different sort of a thing if they started to say, well, we're replacing our dollar reserves with yuan reserves, right? That's the same as what Russia trying. I think that the bigger story in the currencies is that the coordinated economic sanctions against Russia have not appeared to be super effective. I wouldn't say that they did nothing. I mean, the Russian economy is not necessarily in a good spot, right? But the action that they did really should have flattened them, and it did not, right? That's kind of an issue from a policy perspective, and maybe the question is the tool not that effective anymore? Is the tool not effective against Russia because they're too self-sustained? They're self-sufficient. That's the word I'm looking for. They're too self-sufficient, Or was it ineffective because there were enough countries out there willing to go against it? I don't know. But you can my point was the dollar bears have gotten a couple of headlines and are like, oh yeah, this is really bad for the dollar. And the dollar is expensive here. I mean, anything over 100 is high for the dollar in all seriousness, right? So them all, being super loud on social media and everything, that suggests to me that they smelt blood in the water. So yeah, those guys getting creamed today, I guess that makes sense. It's just the amount of flow that I'm seeing in the treasury is just so extreme. Doesn't make much sense to me. Unless there was these guys. I guess another take on this could be that there are guys that or this guy. Remember that we had rises going into both of the CPIs and the numbers on Tuesday too, right? What was the number on Tuesday that we got? Factory orders. I forget which one it was, right? Maybe those guys are taking profits. That would be that would be about the amount of volume that we're seeing, right? That would be about the amount of volume that we're seeing. So that one would make sense to me. Is like they got that pop and then they were planning on taking the profits. They were never intending on keeping it through to non-farms because they knew that market would be very illiquid and a bad place to exit the position. So if that's the case, and the larger trade that we want to make is rates are going to continue going lower because we're moving into a recession, then this could be providing us a better position to go long treasuries again next week. Well, I think you got CPI, right? You bought a new laptop? Oh, that's good. So the problems that you were having are like kind of concerning to me, just because I was like, well, they sound like solvable problems, but like he's having enough of them and they're complicated enough problems that like I wouldn't be able to like continually support him. So you getting a new one, that's good. You don't have to friend me. You can just message me. Check the study topic in your... Oh, okay. Oh, what? No, it can't be you. I don't see anything there. Maybe you don't have the ability to post links yet. Let me see here. No. You didn't even see a deleted message. Oh, that is you, Jet. Yeah, so let's give you regular permissions first. You're talking about the data. Yeah, I can so listen, I have no qualms with sharing the data. You just got to give me a location that, you know, like if you have a Dropbox that I can put stuff into, then I can just upload it to your Dropbox, right? And I can put in as many as you can get or something, you know. I don't think, it seems to me like something happened. I didn't have the indicator on my chart for a while, or so there's a period of data that's missing that I'm a little mad about, but I hammered the old one, destroyed the living heck out of it in usage. Well, you guys that trade on laptops, man, it's not like you can't make it work. It's just so much nicer to have a desktop. Man, it's still going. This is so crazy. Wait, so my original position, where was it from? Was it from 11? Was it from 3.311? Yes, it was from 3.311. The other thing is that we had, again, after the news yesterday, there was selling, and I was a little perplexed as to what was causing it. And now here it comes in this morning, and it's even stronger. I don't know. Maybe that it coming back up and everything was them giving me a freebie. kind of like with the degree that it's come down and everything, it kind of makes me wonder like how they markets sometimes they don't make sense, man. You know what? It's so like the action that we've had, I think the flows can explain it, right? But it's still, you still look at it and it seems like it doesn't make sense. I want to inspect the orders and made HFT plots. Okay. I think I posted in the downloads channel too somewhere the script that like exports the data. And that would probably be the better thing to do if you use NinjaTrader. You got a little bit of a pullback there. Well, you know what? On this bigger position up here, I think I just keep that. And I'll add contracts to it if it keeps going further. If I find a spot that seems like, so like that 19.5 was like the first spot that I saw where we could even do that, and it's come against me. So now that it's come against me, I'm kind of like, okay, this is a trending market, hands off for a while, and we can wait until it goes into more of a quiet ranging market, take a spot on the bottom of it, and hope that. I just saw one of the like the contributor articles on Zero Hedge's ChatGPT recommends massive allocations in gold, and I'm like, if anybody that cares what ChatGPT said about what they should allocate is retard, because you know that it's just taking what people have said on like Reddit, right? Oh, let's see here. I missed a tweet by Mohammed A. El Arian. With U.S. jobless claims coming above consensus forecast, 228,000 versus 200,000. Market concerns are spreading about the speed of the U.S. economic slowdown, and with a pivot from favorable interest rate risk to unfavorable credit risk, bad economic news becomes bad news for stocks. Interesting. Thick book. Well, it's thicker than it's been, that's for sure. I would say that this 2000 is not unusual for this week, but 2000 is a lot better than it was like 2 weeks ago, right? Well, I really thought that I was going to hold this into non-farms yesterday, and now that this crazy flow the other way has disrupted my trade, I don't know what to think. I guess what I should think is, okay, then we had to manage the trade. We did what we had to do. I wish I had done it a little bit sooner and saved a little bit more of that, but it's okay. It's not like the end of the world. You know, it was 20 bucks. This is just like an average size trade that we lost. Well, let's say $30. Okay, so a moderately sized trade that we lost. You know, do all sorts of crazy things tomorrow, and we can just kind of see what it does, because we did what we were supposed to do, and it just didn't work out. Right? I'm still disappointed. Oh, that's interesting. This U.S. Postal Service facility in Utah does nothing but decipher your bad handwriting on letters? Really? Maybe they found a better spot here at 14.5. Oh, wow. Roulette is not quite as random as you think, says Bloomberg. Is this the end of roulette? Shall we read this Bloomberg article for you guys? Okay, here's the equity market open. You know what else is interesting about today is that this flow is incredibly strong. Markets overall are fairly constrained. Like NQ is down 0.5%. Okay. The story. No, wait, this might be too long to read to you guys. Yeah, I don't think you want to read this. I'm like scanning it till they get to the part where they explain how they do it. Ed Thorpe built some gizmo in his shoe. I tell you what, the thing that I remember when I was, how long ago was this? I mean, it was over a decade ago. One time I went to CES. I would really like to do that again because I got my hustle on and just got as much free stuff as I could, and then I started trading with people on the last day. It was awesome. It was so much fun. But you know, my friends, they wanted to gamble, but they didn't want to gamble. They just wanted to put like $1 into a slot machine and stuff. Thinking back on it now, it's like, yeah, it was really boring. It was really boring. But then I learned all this stuff about how the casinos actually work, and it really is like, even if you get lucky, they do everything they can to try and screw you out of the money anyways. It's just like made me want to never give a casino money ever. You know. But all of the stuff about counting cards and all these things, I find it so interesting. I find it so interesting. Oh, Claude Shannon was actually involved in trying to predict roulette. That's funny. So, by the way, what the hell? If I had held on to my original position, I would. We're below where I got out. We're below where I got out. I'm not seeing strong volume come in the other way. This looks like more like meta orders over in there floating back to 19. If you've ever seen blackjack and card counter videos, they get pushed around by casinos pretty much within 30 minutes. It's pretty ridiculous. Yeah. And like what's wild about it is how many people are still willing to do it. Maybe I should be in the casino business and just make money from that. Seems like a much easier gig. No, I only want to make money from providing value to people. So, you know, I was talking about maybe I would do a third contract. I thought that would maybe be something that happens tomorrow. Now it's coming back up. So is this going to come all the way back? That would be funny if it came all the way back to 3.26. But that does not, I still think, I cannot sit there with almost 50,000 contracts going against me on a position, right? That's not the way that we trade. But I could get back in, right? So I probably should have gotten out of that earlier. I could get back in, right? So right now, we're about at the area where I probably should have been getting out in the first place, right? So do I want to get in again here? That makes me nervous. In fact, actually, you know what I think is going to happen now is I think that they're going to trade back and forth across this bottom range here several times. That's what they did yesterday, right? So they moved up, like they had the big shot up, and then the range that they shot up across, they moved across this several times. Yeah. What I had found with them is that if you go in and you put like $1 into penny slots, you will probably make 20 bucks. And then if you keep playing, the 20 will disappear. Right. So it's like you play until you make 20 bucks and then you stop. Used to program slot machines. Oh yeah, that's the other weird thing about it is how it's not. You know, they're only pay out so much, and basically the way the regulations work is not. It has to be perfectly random. The way the regulations work is, you can only control how much it pays out. It has to pay out a certain amount. To be fair, this was so weird to me. So are we having this strong move back because the dollar is reversing back lower? Seems like it is. Seems like it's coming back really strong. Seems like if I had the fortitude to hold on to this, then we could be close to what we originally had. This is not the trade I signed up for though, man. Like, I wanted to trade on this economic data being bad, not on what is the dollar gonna do today. Oh, man. Well, all I can do is watch. If my order up there at 24.5 on the sim account works out, that's going to be amazing. I don't know about this. This is a little bit odd, to be honest with you. So, yeah, I hate it when it does that. Oh well. Okay. So if I come over to the chart here, so let's try doing a little bit of order flow analysis. So we had the spike and somebody sold, Somebody sold all of this. So it went from about 19.5 to 15.5. So this was a 40K sell. 40K sell down. And it happened on 2 legs. Okay. Now we've had a pullback of about 10,000 contracts. And it came all the way back up to here. Okay, so has it not been very long? Well, it hasn't been 45 minutes. So you could say that this move up here was going into weak liquidity for sure, but it's like such a pittance in volume. I'm not quite sure that one makes sense. And the thing is that it's sitting there. It's like saying, hey guys, we're gonna go up. Like when I look at that chart, I like, even though I know that this shit doesn't work, it's like the brain can't help but see it, right? The way that this chart is going, it suggests that it's gonna do this, right? Is that not what it looks like? Like if you were doing the price action thing, you would wait for it to come probably to here, like the 15, 16 area, right? But from a flow and fun perspective and everything, that doesn't make any sense. That we would be able to go even higher on like no volume. Yeah. Watch it work now. It might work. You never know. All I know is that I back tested it and that the back test results were not very good. Maybe when Bullard speaks. Yeah, you're right. He speaks at the top of the hour, doesn't he? Well, but when I say that they work, I don't mean it's going to work this one time. I mean, if you did it 10,000 times, it doesn't work, right? Yes. If you're coming in and every little move that the stock market does, you're going in and you're pointing those sorts of things out, you're gonna find a lot of times where it seems to play out exactly the way that you thought it was, enough for you know, you with confirmation bias attached to think that it's really effective, right? Like that's the thing, is I think that's one of the that's why it messes with me so much, is that I know that I could come in here on stream and just spend the whole stream saying things like that, and everybody would think I'm a technical analysis genius, right? Even though I know from backtesting it that it's not an effective strategy. Oh, here's an interesting thing. This chart from Pantheon Macro. Oh, come on. Why isn't it showing me the white version of the chart that he just had? It's like they replaced the image or something. There we go. Okay. So they're saying here's the weekly initial claims pre-revision, with showing that claims were going down. But now when you see that it's been revised, you can see that actually since September, it's been slowly kind of rising. So these initial jobless claims, now that they've redone the methodology once again, paint an extremely different picture from the data that we've been getting the past 3 months. Well, they're fighting around it, so I would expect them to have a little bit of trouble at 19.5 again. But you're getting like big candles in here. It wasn't a shot at you. It's a general statement of. Oh no, I understand that. I was still just. Wait, what the hell? Is this for real? The CEO of Olive Garden says the average customer eats 5 breadsticks with a standard deviation of 2. Oh no, he must be joking. And then Nassim Taleb pops in, you imbecile, unlimited breadsticks form a Levy-stable distribution with a fat tail. The variance is infinite and immeasurable. How would you stay in business if the average person eats 5 breadsticks? Okay, it's heading back down here. They get you on the drinks and the desserts, yeah. They sure do have the best Alfredo sauce, though, man. Ugh. I haven't eaten there. My ex was obsessed with that place. So now it's kind of in the zone. I actually think I'm going to do something really degenerate here. It's freaking Olive Garden. How can you eat 5 breadsticks and then still eat that? You know what, man? Last time that I went to the Olive Garden, though, I was really disappointed. I always liked their steak gorgonzola because you get that demi glaze or whatever on the steak. Oh, that's so good. Last time I went there, it was trash. It was like they'd completely changed the menu. Anything interesting was taken off. Food wasn't cooked very well. It's like, wow, like things have really gone downhill during the recession. Makes me afraid to go check out the Cheesecake Factory because that Cheesecake Factory was always my favorite. Oh man, at the Cheesecake Factory, they've got this mac and cheese that's really good, and you can get a hamburger that has they take the mac and cheese and they deep fry it, you know, like they bread it and deep fry it, and then they put that on a hamburger. Oh my gosh, that's so good. People eat the breadsticks and salad, and then they get a box to take home for leftovers and dinner, and they don't eat. Yeah, the college kids on a budget know how to play them. Yeah, eat 5 breadsticks and then take it home. Well, I have been sent home with large amounts of breadsticks before. It's like you request a ton of breadsticks and then you don't eat them, and it's like late. And they're like, oh man, we ended up with late breadsticks. And then they just try and force them all on you and you take them home. Now this is interesting. There seems to be a little bit of resistance at 18 for some reason. They can't seem to cross that line. This is kind of looking to me like market maker in charge again, though. Sounds good. I should turn this off. Hold on a second. What's interesting to me is how would they track that? Does each server have it? No, I don't think it works like that at all. I think the way that it works is they make a certain amount of breadsticks per hour and the servers get to fight over them, and that's how they do it. That's how they limit how many breadsticks get out there. So it can be the case that you come in and you just take a ton of breadsticks, and that results in some other table sitting there waiting for breadsticks. I think that's how it works. They absorbed at 16.5. They're messing with me. They're like, haha, so we'll absorb here, so you get filmed. The real Hunger Games. You know what's something I feel so ADHD all of a sudden because I feel like I'm just jumping around from subject to subject. Now you got me on the Hunger Games. Is it just me, or did the Hunger Games die down like way too quickly? Like, I thought the first one in particular was a really good movie. I thought all of them were pretty okay, but like as soon as the last one was done, it was like nobody ever talked about it again. They don't promote it anymore. It's not a thing. What's with that? Maybe it was because they realized the political undertones in it. And man, I was so close there. I put my lot at 16 because there's usually a lot of liquidity and silliness at 16. They absorbed right in front of it, and then as soon as it started ticking up, somebody stacks there. I'm telling you, man, this sort of stuff happens to me enough that I just don't think it's a coincidence. I don't think that they're necessarily looking at me, but I think that they were like planning on people playing it that way and are trying to get people to now chase it. Plot the breadstick supply and demand curve. Does so it's because the supply changes a lot, right? And it goes like this. So you get a bunch of breadsticks come out, and then at the very beginning, a lot of the breadsticks get taken out, right? And then you kind of get into, and then it comes up again, right? That's the supply of breadsticks, right? But then you got this demand curve that like peaks at dinner, right? And comes down. So if you're a little bit after dinner, right? It's like more like 8 o'clock or 7:30, 8 o'clock, right? You're waiting on the breadsticks to get done, right? And then you get through here and you get to the end of the day. There's this point at which, you know, another batch is done at the end of the day, but most people are done eating. And so they have extra breadsticks. So these rest of these people end up getting twice as many breadsticks as they should, because they're trying to pawn off the extra breadsticks. That's the demand for breadsticks is definitely inelastic. Yes, that's true. How relevant is the opening price on Sundays to institutions? I probably not. So this is the thing that I think is so funny about this one. This is you actually, man. Sometimes I wonder with you, Trading Bunny, if like you've been watching this stream longer than you're putting on, and you're intentionally asking me questions that you know will just get me going and not actually just asking because your questions are just too good. So the closing price matters. So all of these institutions will mark to market their portfolios, and based on what the mark to market of their portfolio was determines the credit or margin that they get the next day, right? So closing prices are heavily manipulated, right? Like traders will straight up come in and say, I'm going to buy the S&P up as hard as I can so that I will have more margin tomorrow to buy even more. They play those games very, especially with options, that those games get played all the time. So that means that you really shouldn't put too much stock into what closing prices are, because they're heavily manipulated, right? And you will find that in the overnight session, and especially like when the overnight session starts, that there's usually gaps and stuff and all sorts of fishy business happen, because basically it's only the market maker anymore, and the market maker goes and prices the asset based on what they think it should be worth at that time, and that probably differs from where it had been manipulated to in the close, right? So the closing price, it matters significantly, but it's also like if you were to try and do an analysis on it as a retail trader, it doesn't work very well because the closing prices are so manipulated, right? The opening price, well, so here's where I think that the opening price does matter, is that, you know, that determines where people start taking their positions from, right? So it kind of matters in that respect. Too old to become a quant. It sure does. That's the thing that really sucks about this, is that it really seems to me that if you really want to go far in the industry, that you have to come out swinging from a young age. The probability, it's not completely unrealistic for me, but the probability of me coming out at, you know, close to 40 and then all of a sudden becoming a quant, it's not as common. They prefer kids right out of school. I do have some things on my resume that I get contacted by recruiters for jobs like that, but there's a bunch of older quants, and well, yeah, so if you like went back to school and excuse me. So I guess what I'm saying is that it requires some pretty heavy schooling to really get into this stuff, and I'm finding it very difficult to get to the level on these sorts of things that I want. But yes, I could do the data pipeline engineering for sure. I could do the programming side of it for sure and work my way into a thing. And then the biggest thing that's holding me back is my insistence on living in Utah right now. Not that I would be opposed to moving to New York or Miami or wherever it is, but it would be really hard to make it work. Can I ask everyone what their trading goals are in terms of weekly or monthly profit? Do you measure? Well, no, I personally, I don't think about those things at all. I intentionally avoid them. Because you're only going to get what the market gives you, right? But like if I can come out on a day and make 10 to 20 bucks, I'm usually happy. On a good day, 50 to 100. Should have just taken the 50 yesterday. Sucks. Sucks that it's played out the way that it has. Tell you what though, I think I caught it pretty good there in that, you know, I thought, well, it's looking like it's just going to go straight up or it's going to pull back and go straight up. But I don't think it's actually going to do that. I think that it's going to mess around in this area for a long time. It's just going to frustrate people. I think the big trade is already over. Is the dollar doing anything interesting right now? No, not really. It seems like it's found a spot. Okay. But anyways, so if I was running like Seth's long short equity or treasury fund, long short treasury hedge fund, you know, if I made 20 or 30% in a year, that would be like amazing, right? So what is that divided by 12? Let's just say 20%. 20% divided by 12. You need to make 1.5% per month. Possible, right? Okay, here's Bullard. Sounds like a very technical speech so far. Spoo's doing something here. Canadian IV PMI was 58.2 versus the previous reading of 51.6. May also be a reaction to that. Well, I took the bait. Let's see if they pull it out here or if they push to new lows. Fed's Bullard inflation has declined but stays high. I'm kind of being a little quiet here because you know, in hopes that Bullard might be saying something significant, but I don't know if that's actually happening. So the issue is that here's what I see retail traders do, is they say, I want to do this for a living. So I need to make 6 figures. So $100,000, that's a nice even round number, right? And then you say something like $100,000 divided by 250 trading days a year or something like that I have to make $400 a day. And so then they're coming in here and I have to make $400 every day. But then you realize that that's like, well, that's if I make $400 every day. But then some days I lose $400. And then the next day I'm going to have to make $800, right? So then you kind of change it around to be like, well, actually, I need to, on, you know, the good days I need to make 1,000, and on the bad days I need to lose 500 or whatever the deal is, right? And when you do that kind of an exercise, right, you come out with like certain targets, and you will probably see that those targets are well within the range of the volatility in the instruments, right? Like that it's possible. Is when most people do that exercise, the conclusion that they come to is that it's possible. And the problem that you get with that is that you don't realize how much volatility you're actually taking on to do that, and how much leverage you're actually taking on to do that. And what it results in is a strategy that, you know, like can just fall apart on you so quickly, right? And so this is why most people, they're not able to make a living from it. Is that you're trying to take like a $10,000 account and make, you know, make 10x on it every year. Can it happen? Yes. Do very many people do it? No. Really, when you realize that you're trying to 10x your money every year, you realize how silly it really is to think that you can make a living. Unless you have $1 million. Unless you have $1 million, it's not a career. Sorry, it's just not. And people will always come in and tell me, well, you're too pessimistic, or well, that's why you're never going to get it. And it's like, no, it's just, you just don't realize the numbers, right? The numbers are that trying to come in and make day trading your living as a retail trader is dumb unless you already have $1 million. But you can come in and you can do it as a hobby, and you still have that potential to get, you know, lucky. And if you're lucky, then you will be that person that gets $1 million and then you can live from it, right? So that's the approach that I would take. And if you're looking for more money in the interim, learn to code, or start making applications with ChatGPT. Become a prompt engineer. Well, S&P 500 getting a good bounce here the last 15 minutes or so. Fed's bullard. Lower bond yields can assist in offsetting bank strains fallout. Stress can be contained in macro-prudential tools. It seems like his speech so far has been too wonky to have an impact on the market. Back to 16. Always shenanigans at 16, man. The results are different when doing it for a living compared with doing it. Well, so that's another issue, is that a lot of people will come through and they'll do a strategy and they find that in order for it to be worth it, they have to do it full time. Yeah. But then you're just adding more risk to the trade, right? This reminds me of a thread I read yesterday. This one was I think that there's some problems in this guy's approach, but like, let me find this thread. Well, this thread is depressing. Just warning you, this is a depressing read, okay? Posted by High Moose UK. My reality of trading and how I wish I had never started. So this guy says, after 6 years and somewhere in the region of 12,000 pounds, I finally give up and want to share some truth about day trading. Not only is it almost impossible, it's brutal and can take you to some dark places in your own mind if you're not careful. And it has happened to me more than once. I have tried everything in my power to become a profitable day trader, and I cannot do it. I'm pretty embarrassed to be posting this, but I think the insight is important. I want to start by saying that I am 31 from the UK. I'm very computer IT literate and dedicated, single with no commitments, so I have no limit on the time I could dedicate. So this is like, this guy claims to be like Seth, but not married. So ability to take on more risk and spend more time on it. Okay. What I have tried: developing mechanical trading systems, developing scalping systems, developing discretionary systems, developing multiple time frame trading systems, developing SMC, smart money concept trading systems, developing price action trading systems, strategy quant automation, developing automated EAs and trading robots, developing order flow / level 2 strategies, learning PineScript to build and test tools and strategies while you're using PineScript or MQL4. Learning MQL4, that's so he didn't get into the more serious stuff, but okay. Backtested literally thousands of indicators and tools, forward tested hundreds of indicators and tools, backtested and forward tested hundreds of trading systems. So based on everything that he went, it sounds to me like most of what he did was technical analysis, right? Most of what he did was technical analysis. Well, okay. Here's where some of the money went. I have spent over $6,000 on prop firm accounts. Holy crap, man. $6,000 on prop firm accounts. You could just put that into account and trade that for like 10 years. And yeah, all that guy has said is TA. That's what my thought was like, well, maybe try macro trading. And then, you know, you get back more into what we do, where we're kind of taking everything that we know actually works and try to put it all together. There have been blocks or months or years where I have left my job to focus on trading. People would normally say, don't leave your job until you're profitable, but that wasn't possible for most day trading strategies or most things that didn't revolve around a 4-hour or daily time frame. Well, he did say order flow, or developing order flow / level 2 market data trading systems. So he was trying to do something with the DOM, although it sounds like he was maybe trying to do it more for like a robot. I don't know. Those are hard to develop and test though. So the other thing that I find interesting is like, I've been trading for 5 or 6 years now. So about the same amount of time as this guy has had. It seems I've spent a lot less money and had more success. But you know, I've done all of that with going down one kind of path and refining that path. And although there have been like major switches in there, I've not done as many different varied like schools of thought as he has, right? I've basically gone through like the first like 12 on this list here or whatever and been like, well, that's BS. That's not going to work. What we know about the market says that's not going to work, right? Oh, well. Anyways. He doesn't say that. He said level 2, so I would assume that he has used the DOM, but I digress. Because what you're trying to say is, oh, well, if he had used the DOM, then he would have success. No, it doesn't. No. Probably still would have had the same problems. But the key thing that I don't see on that list that would make a difference is incorporating fundamentals and news, right? Which is what most retail traders do. Well, I'm not saying that will make you successful either, but it certainly helps you. I can't even begin to figure out how much time I have spent backtesting, forward testing, trading live programming algorithms, monitoring markets, and testing system. This doesn't include the sleepless nights where I would be getting trade alerts and entering trades throughout the night, or being stuck in positions that I couldn't leave open while I slept, so I had to stay up and monitor the trades, or even pulling over at the side of motorways or roads to enter trades while I was driving. Sounds silly, I know, but in some cases that was what I had to do to test particular systems correctly, and I really did do whatever I had to become profitable. It's hard to explain how much time I have dedicated to learning to trade. I have a stack of 13 notebooks that I have filled from cover to cover with manual backtest results, ideas, strategies, and more. Oy. So you can't say that it wasn't for lack of trying, although he's doing a lot of things where it seems like he's not working very effectively, right? I don't really know why or where I'm going with this post, but I just wanted to shed some light and share my experience with trading online. You see a lot of talk of keep at it and you'll become profitable, or you have to become disciplined and consistent, but that doesn't seem to be it for me, at least. The only people in this industry that seem to want to help are people that are out to make money from you, whether it's selling courses, selling signals, lying about being profitable, shelling to their independent broker accounts, or anything alike. Other than that, it's a very lonely business. I wanted to be a day trader so bad that I made it a serious priority, and that has only led me to neglect other aspects of my life and damage the career path I was on, which now means my best option is to retrain in something completely different. I'm still going to invest in the long term. That's working fine. I just think I want other struggling traders to know that you aren't alone and it's not worth your mental health ever. I definitely wouldn't recommend sabotaging your career in the hope that becoming a day trader, and stay honest with yourself. Yeah. He was trading Forex actually. So I came down here. Yeah, a lot of the comments on this thread was, well, you should try this. I've been successful. Did you try this? When you say IT literate, you are talking about being a programmer, because it looks like you were using some TA indicator website and other TA related tools. Yep, exactly. I say this all the time in the subreddit, but don't trust the size of one size fits all backtesting frameworks like PineScript. If you're serious about algo trading, then the first step is developing your own backtesting framework. That there is, I have some problems with PineScript, but it can be done correctly. I don't know. Yeah, here's the guy saying, oh, well, you should just use price action, blah, 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 blah. Okay, I never built out a full algo infrastructure. By the end, I was using strategy quant and proving strategies for robustness. I would then take these strategies into MT4 and test on 99% quality tick data. If I was happy with the results, I would forward test slice for 6 months. Still have some running. That being said, I haven't completely failed on the algo front. I produced some profitable, robust looking strategies. Most of them were higher time frame strategies and portfolios. Some of them are like still live testing, but they don't trade much, and I view them more as a long-term investment. Yeah. Basically what he's saying is I found momentum strategies that worked. Oh, surprising. That's what you found strategies that worked, which is like most of what the professional industry is doing. Yes. But no, where is it in here? He says somewhere. Oh, come on, where is it? I did base a lot of my analysis on technicals, and that was because for day trading, I've always preferred a mechanical approach over discretionary, as it fits my personality much better. I also tend to overtrade and want to be in the markets too much if there's no structure to the strategy. Okay, but there's very little. There is so much more edge available for you in knowing what is going on in the market compared to doing things purely technically. Like the amount of edge that's available technically is there's only so much, and there's very, very heavy competition for it, right? Somewhere in here, he said that most of what he was doing was on Forex. He said that like 60% of it was Forex. So I do see problems with what he did. I do see. But like, that's the crazy thing about it, though, is like, how many different ways are there to trade, and how much work? Like, you can come in and work super, super hard for years and years and years and not figure it out, right? And there, I don't see anything in there to suggest that he ever thought, oh well, let's just try trading the news and see how that works, right? It would probably say he might not have been successful, but he might have a different perspective if he had tried trading the news. Oh, there's so many comments in this thread. It's actually one of the most active threads I've seen on r/algo trading. So here's another thing, is that I don't know if this is strictly true or not, but it sure seems to me that if you want to compete on the algo trading front, that you need to be incorporating machine learning into it. Which means that you're kind of like your NinjaTrader. Not that you can't use NinjaTrader in conjunction with it, but you're going to have to like build stuff on top of it, right? Because NinjaTrader is not built for those sorts of things. And then yes, it might make sense to just go and do it in Python. Right? Oh, I can't find it anymore. He definitely was mostly Forex, because he's using that MT4, right? The thing that impressed me though is that he has so many notebooks. That's crazy stuff. So do you see what it's doing to me now? So I said, okay, the thing that they might do is like they'll come back to 60 and then bounce back up, and that's like the price action setup. But I don't think that it's like going to bounce up and go to the high of the day or anything like that. It's probably going to get stuck in this range now. Probably what it's doing is there was a large meta order sell. The order is done now, and so now the market maker is just recovering by going back and forth across this range. Forex data is trash though, like you can't, well, yeah, but if you're, that's the whole point that I'm trying to make, at least, is like, if all you have is a time price series, a single time price series, it's practically useless. And 99% of retail traders, that's all they spend their time on, is the analysis of one single time price series. They don't come in and say, oh, okay, well, let's try and incorporate the order book. Let's try incorporating multiple time price series with with correlations. They don't say, let's incorporate the news. It's just, and why? Because everybody's told them that it's all about analyzing charts, I guess, and that appeals to our minds, I guess. I wonder if you were really good at analyzing charts and seeing patterns in them, what would actually be the correct career for you? I don't know. Maybe I probably was trading off of his phone a lot. But, you know, like, but that's... The thing is that there's like a trillion things that you could be doing wrong, right? So he might be able to point out a bunch of things that we might be able to point out a bunch of things that we know he's doing wrong that he should be considering into his trading and his strategy, right? It makes me a little sad that a guy like that does not stop by. But you know what? I find this one so interesting. I'm going to message him. How do I do this? More options. Send message. What should we say to this guy? Has Bullard finished? Well, I haven't heard anything on the news quack from him, but I think he's still speaking. He just might be talking about things that they don't consider newsworthy. As soon as he said Forex, I would tune him out. Well, no, I don't think I should turn to. It's not that I should turn him. Well, okay. Why are you saying you should tune him out? Because he's not saying, oh, I've done, this is the way to do it, or anything like that, right? Well, what is interesting and notable about this person was the amount of effort that they put in. That they were trying serious things, right? So this is a person that, if they were given the correct guidance, should be the perfect test case to become successful, right? What I'm trying to say to you guys is, even with the correct guidance, you might not be successful, right? It's just kind of the way that it goes. I mean, what I really want to do is I want to say to him, okay, come watch my channel, trade micro treasury yields for a month, and tell me how you do. That's what I want to do. No one in their right mind would touch FX even with a long stick. Like, that's okay. So like, here's the thing: is like, let's say that we're searching for treasure, right? And in a landfill, okay? And you got this huge heap of trash, right? And somewhere down in here is what you're looking for, right? Or something that's successful in the current market. Let's just say, okay. And within that, there's this area of stuff that we know to be true, that we can prove to be true, right? So everybody's in here digging for this, right? If I'm coming in here and I'm digging and I found this area of stuff that we can prove about the market, that it should be more likely for us to find something in here. Let's just say that there is stuff out here too, okay? How do I convince people to dig here? Right? Because what I'm saying is like, yeah, if you dig here, you might dig down to there and never find this, even though you were doing the right thing, right? So if that's the case, then how do you really convince them that my area is better to dig in than anybody else's area, right? Well, my take on it is that we know all of the things about it. Like if this is gold, we can say, well, we know that gold is more likely to be found in this area because we find these minerals and that tends to be correlated with more gold and, you know, or all of these sorts of things, right? Like you have to get into the science of it. And there's so much of like such a big mountain of stuff to filter through that most people never find that information. And I feel like that and I'm super egotistical, so I feel like I'm the only person that is actually providing all of that. And this guy clearly had never run into my stream. So then I'm sitting here like, well, I'm not saying like, okay, come and do my stream and then we'll see if you're successful. But rather, okay, so if you do listen to my stream, then what do you think? Right? Or what would his hangups be that would make him be like, well, this isn't worth it. This I shouldn't do, you know, like, would there be things that he would hear that he'd be like, nah, I don't believe that, right? Oh, we're getting the natural gas stuff. I'm still thinking about what to say to this guy. There's no point in looking at the greyhounds on the... What does that mean? I don't understand. Yeah, I just want to see if I can convince him to come on the stream so I can ask him some questions. This contract right here has been not too bad. Oh, by the way, this should probably be 2. Yeah. Hasn't been too bad, but they're not getting to the 20. Might be waiting a long time for them to get there. There's no point in looking at the charts, but rather at the dump. Well, I'm not going to say that there's no point in looking at the charts, but there's a lot of information in the DOM that you're not getting in the charts, that's for sure. No, I've never used Bookmap. It does look cool though, doesn't it? Eastern, not Easter time. Okay. Dun, 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 dun. Oh, I don't know if I said what the name of it was. Oh well. Is there something you had that showed something similar plotting the orders? Yeah. Okay, so sorry, now that I'm like back on. So we can come and we can look at a similar chart here within Jigsaw. It's called the Vista chart, right? One of the cool things that you get is you get these histograms. So this is showing you the depth. Here's volume, delta. Yeah, let's turn the volume off. Flip is usually useful. Okay, anyways. And then you can really come in here and look at what happened and stuff. There was big selling on this move, man. It was just big selling on that move down. Anyways, but like again, what I feel happens is when you're looking at these charts is you're looking like, oh, okay, there's this big spot, right? What most people do is they say, oh, look, there was some liquidity down here and that's what stopped it. Well, that's not what actually happens. What actually happened was there's always kind of a little bit of liquidity leading them. And then when they turned around the other way, that liquidity stayed there. That's all that means, right? And so a lot of people will think they see things on these charts that really aren't a thing, I guess you could say. I feel that these charts get people way too focused on the technical analysis of things. And because it's so advanced and cool looking and everything, it really catches people's eyes. But I don't have any of these open anymore. I don't find it that useful. There's nothing I can see on this chart that I can't see up here, right? And what matters to me up here? What are the inside bid and offer? How much volume actually ends up trading? What sort of things can I see that might give me hints at meta orders that are being executed? And I'm not looking to see something in the DOM and then when I see that pattern, then I take a trade. That's not how I do it. What I do is I say, this is a flow that I think is going to come in. So when I see that flow come in, this is how it should play out. So if I see those things playing out on the DOM, then I take the trade, right? And it's what I'm looking for on the DOM could be a little bit different each time. based on the trade that I think is going to happen, right? So with this most recent one, if we were expecting people to get like creamed on the dollar today, right, which was definitely not on my radar, but I think that's why we had this move here today, then I would be looking for like them to trade correlated with the dollar regardless of how much liquidity they put up. And that's what happened. Then I could justify taking the trade, right? So those are the sorts of things that I would encourage people to pay attention to and focus on, and not necessarily like finding the coolest, most advanced chart. Or another way of putting it is that there is more edge available out there in understanding what's driving the flows from an informational perspective, rather than trying to find a statistical aberration in the market, because the market is very, very good at removing those. They're very hard to find, right? I find that guy would be interesting to speak to, because it sounds to me like he spent his entire time on technical analysis. And I don't think that he would make money from doing it this way, but I would just say, like, look, you enjoy doing it? Do you have time at this time of day? Then just come and trade micro treasuries with us and just enjoy micro treasuries for what it is. And if you make money, cool. And if you lose money, cool. As long as you're not losing, you're losing the minimum amount, right? It's fine. And learn about the market and see where that goes, instead of all this technical mumbo jumbo. Well, I'm happy that I got my fills. I still got another order like way up here. I don't know if that one's gonna get touched. I've tried for a long time to understand capital flow and how to apply it to day trading. Well, so when you say that, are you saying like, I still don't feel like I understand it? Or are you just saying, oh, I haven't had a whole lot of success with it? Or, because I think a lot of what it is like seeing lots of different situations and understanding why they happened after the fact, and it's only like one part, and both, yeah, because you'll find when you watch here on the stream, like today is a good example. I run into tons of situations where I feel completely perplexed, right? It's hard because the thing is that the move could be so the move down that the aggressive move down that we had in treasuries today could be based off of some sort of piece of information, and we're just not privy to it, right? Or we've overlooked it. There could be something that we overlooked, right? But it could also be some technical factor positioning thing. It could be just somebody decided to go long the dollar on a whim, right? And we don't really know necessarily, right? And so most of the time, there are going to be certain elements that we are in the dark about and that we feel in the dark about, right? So when I get frustrated is when I feel like I should be in the know and I'm not, right? That really, really frustrates me. Or like, I think that I have something that should really effectively predict how this is going to play out, and it doesn't do that at all. Those are the ones that really like warp me out, right? But I think that the key here is doing that practice every day, and then being able to identify the situation where you really actively have something, where you really have a piece of information that will be very impactful to the market and isn't being priced in yet, right? And you just, essentially think of it as practice for that one time that year that you really got something and you can make a killing from it, right? I really thought that this week was that week. Well, maybe it was that week because I did make a lot on this sim trade, but that's not the way that I trade my live account, and I only made $20 from it. Okay, well, Could be worse, right? Almost could have made 50 bucks at one point, but so maybe I missed an opportunity there. But you know, that's the first time this year, like this whole year, where I felt like I really had something strong. Right? So the situations where you can really take advantage of it, sometimes they're not. I mean, they're all over the place, but when it's actually going to work for you and the way that you need to execute and everything, you know, when all of the planets align, it doesn't happen every day. Doesn't happen every day. But the split side of it is that I have like 13 years, actually 15 years, about 15 years of looking at this every day and trying to understand why the market did what it is, right? That's a lot of experience. And so if you're new, there's going to be a lot of things that don't make sense for sure, right? And how do you deal with that? Well, the best way that I know of to deal with that is to just come into this stream every day and talk with me about it. And you see something in the markets and we try and figure out what it is together, right? Because that's the other thing, is you're just one person, right? We with all of our minds combined, we can get a much better idea of what's happening. So that those, you know, together with you guys and the guys in Discord, you know, because sometimes there are flows that just like really perplex me, right? And usually we figure it out in the end. Like, we might not be able to trade off of it, but like after the day is done, we were able to find information that helps explain why it happened the way it did. Right? Yes. Why do you prefer treasuries over any other old thing? Is it because it's easier to analyze influencing factors, macro, etc.? That's exactly why. The ability for us to find information that is pertinent to the pricing of treasuries is, I feel, stronger in the treasury market than many other markets. So, for instance, I don't know anything about the copper market. Surely the information is out there. I've searched and searched. I bet that if you're a copper trader, there's some service out there that provides copper research, and that's the place that you would want to go. But I personally don't have access to it, right? But the things that matter for the treasuries, they're so important to every other market that they're out there, right? That you can find that analysis. Now that doesn't mean that you get to know everything, right? There's definitely things about, like, for instance, how much demand is there likely to be at the next auction, right? There are analysts out there looking at these things, and you can get that stuff, and I don't get it. I don't get that service, right? So there is certainly a lot more out there than what I have. The whole thing is like, how much you can know about a certain market is always going to be just this teeny tiny fraction of everything that's available to know, right? But I feel that the amount of things that I can know that are relevant to that market in the treasury market is a much larger chunk of the market than it is in most other markets, right? Another place where I think that you can kind of get this sort of information is oil. So I think that retail traders can be effective doing this with oil, but you have to have more to play with. And I like to keep things small, right? And so that comes down to the other two things about treasuries that I think make it advantageous for me to trade, is that, number one, I can minimize my risk. I'm not interested in coming in here and YOLOing and turning this into $100,000 from doing degenerate stuff, right? I'm interested in being involved in the market, and yes, I want to make money, but I know that it's a really risky thing, and so I'm going to, take the minimum risk, the minimum risk at which I can play effectively, but still the minimum risk, right? And then on top of that, treasuries are pretty slow. So the treasuries give me time to think and do this analysis and show you guys what's going on and what I'm seeing and stuff like that. So the treasuries also end up being better for teaching, I guess you could say. So this time when they filled me, the market seems to have settled quite a bit more. So that's cool, I guess. By the way, did it shift? Yes, it did. Okay, that's cool. My break even point is like so far down there now, and I have another contract on. So if they were to go back up to 24.5, although if they go up to 24.5, I'd have to be like, yeah, this wasn't I shouldn't have gotten out of my original trade. It seems to me if I had stayed in my trade, I would have been able to make $20 more. I would have been happy with it. But I wanted to be in it like until tomorrow. Doesn't seem like that makes sense anymore. So really the best thing would have been to have gotten out when that flow started coming through. But Gary Norton says stay away from treasuries, you're competing. Well, okay, so if you're trying to trade the way that Gary Norton wants to trade, or teaches to trade rather, you're a market maker. And yeah, you don't stand a chance at being the market maker in the treasuries. No way. Right? So it's a different, there's two ways of approaching it, right? You can be, well, there's three ways of approaching it. You can be the market maker, you can be an informed trader, or you can be a noise trader, right? The vast majority of what retail traders are trying to do, looking at a chart, looking at the noise and trying to find a pattern out of it that they can find to be profitable, that's noise trading. Most noise traders lose money. So the two ways that make money, market maker and informed trader. So the person with the most power in the market is the informed trader, assuming that he is actually really is informed, right? The market maker wants to avoid trading against an informed trader, and they have to compete with other market makers for, spots in the queue and things like that. So in the treasury market, you don't, you're going to put a lot in here. You're going to have 2,000 lots ahead of you in line, right? And if they're able to sell 2,000 lots ahead of you, like, it's not a very good, right? If you get filled, they're probably going to go through you is basically what it comes down to. So yeah, treasuries end up being not the best for market making styles. Now the micro yields may be different. I think the treasuries install better. That's true. I think that's definitely true. Yeah. You have to be patient, right? And in the treasuries, I feel that the treasuries don't lie to you as much, right? These situations where you just make a killing and it was purely luck, that happens a lot less in the treasury market. Usually if you made a bundle on the treasury market, you probably picked up on something real. Not that luck doesn't happen, but the oil market, you can just go and make a killing from the oil market, and that's just like the normal oscillations, Well, what works in the treasuries is being informed, right? Is coming like what we had this week. I wish that we had done it earlier, but if you come in and you say the economic data that we're going to get this week is going to be weaker because of this, and this, and we had information to be able to say that, and you could have been long the treasuries all week, and you could have made a good $200-300 just on micros, right? I wish I was. You're not always the informed trader. That's the issue, right? The challenge is twofold. One, being the informed trader. Two, knowing when you are the informed trader, right? Because so often we think that we have something and we don't. Yep. There are some predictable flows in treasuries due to institutional rebalancing at the beginning and end of the month too. I don't know. Yes. No, it totally is. That's part of being informed. I don't know how to predict those flows. So, every once in a while, we'll get a situation where we can take advantage of those, but it's kind of hard. But that has been a source of edge. We have made some good trades off of those in the past, yeah. Anything, it's any piece of information that is highly effective at predicting future flows, right? This whole thing that like, oh, well, we had this chart pattern and like 51% of the time it tends to go up. That's not highly predictive of future flows, right? But yeah, like there's going to be X thousand contracts that have to buy at the end of the month. That's something that can be highly predictive of flows. Well, part of me still feels a little disappointed that that trade didn't turn out into what I wanted, and that I could have held on a little bit longer. I always feel like if I had held on to that, though, that it would have come all the way back on me. So anyways, the pullback on this was quite a bit more than I expected. And even though I traded it over here on my sim account, I wouldn't have taken the risk on those pullbacks with my live account. My gosh, trying to keep track of two different accounts and telling you what's going on with both of them is dumb, but I'm trying to be accurate because I don't want anybody to ever say that I deceived you on what my trading actually was, right? I don't want you to focus on that, but you know, I'm still trying to be as transparent and open about it as I can without like shoving it in your face, right? Let's see what the story is after /8-week auction. Yeah, we do have some stuff coming in here. I mean, the other thing is that, well, I was all gung-ho on holding this into non-farms, and then this morning I felt differently about it when I was like, yeah, but this is going to be really scary with the liquidity and stuff. So I'm glad that I still made money on it, right? I'm just disappointed because I thought it was going to be a monster win, and it was just an okay win, right? Okay, so I'll see you guys tomorrow. Man, dollar, such a large move up, and that move in the dollar is almost completely retraced. So let's change the title here to Dollar Squeeze. Dollar Squeezes Shorts. Okie dokie. So, yep, we'll have the room tomorrow. And I think that the market like closes before our stream ends, but we always got things to do, right? We can always do programming and stuff like that. We need to end things early. So see you guys, and this non-farms is going to be important, I think. So see you guys then. In the meantime, stay excellent, team.